Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, January the 14th. All right, now not a lot of change across the news-wise. I mean, we haven't had any major sort of data of yet. And for me, trading starts today for this week. Okay, we've got US CPI numbers. Now, just coming back down to the itty-gritty bits of the US-China trade deal. It's interesting. The Chinese must have asked for the US to drop the manipulator label. That's been done. So it looks like this whole China deal, which I thought there was no way Trump was going to let this thing go through, is going to be done, which is a great thing. That whole US-China trade issue off the table, takes off global growth concerns off all the central banks, and we're getting closer back to normal trading conditions. All right, so let's just have a look where the major currencies are just at the moment on the technical side of things. As I said, there's not a lot of change. We did lose that initial momentum, right, from end of last week. Aussie was going lower, now just trading sideways. Same pretty much for Euro. Sterling continues to beat to the downside. UK GDP weaker than expected, and we saw it slide to the downside. Now, I don't know if it's all she wrote, but really Brexit is the key issue here, so we'll have to see how that goes. Kiwi sliding lower with the Aussie, now sort of drifting sideways. We do have a couple of levels here to focus on. That whole, I think when the US Treasury dropped the China manipulator sort of story there or tag, that really confirmed everyone that the US and China were going to do a deal. And you can see the full unwinding here of the yen safe haven trade. It's now above 110 and cruising, to the top side. And dollar CAD, messy, really messy. Ever since the US non-farms and Canadian employment Friday, it's just banging away sideways. Oil's falling back to $58. That's going to put upward pressure on dollar CAD, but at the moment it's really not doing a hell of a lot. Now you put all that together, what do we end up with? Well, you come to the MyFX Trading Hub and you'll start to see the answers here. The dollar index still a weak buy has gone up, but it is trading sideways. And that's you're getting a bit of a mixed signal here from the two biggest components of the US dollar index basket, the euro and sterling. At this stage, dollar CAD, dollar Swiss, medium term still sells, and the other pairs losing, euro, Aussie and Kiwi losing momentum sort of completely. Now, that's not unusual as we come into such a big release. Now, the best thing about the US CPI is it doesn't have like 6 to 8 components like the US non-farm payrolls. It's, got the month-on-month, year-on-year. We'll have the numbers. It'll either be hopefully weaker or stronger. Okay, if it's as expected, nothing should move. But if we do get some variance there, then we can start to get some idea of what the dollar is going to be doing, right? And that's what we really need. US CPI on Tuesday sets the tone for the US dollar for the week, and that's going to be a huge thing. So make sure you keep an eye on that. It's the only release to look for, so you shouldn't miss it. All right, guys, that's pretty much it from me. Average market conditions still. So just when you have average trading conditions, just check your trade size, right? There's no need to lead in with a massive trade, even on a big release like this. All right, guys, have a good one. Cheerio.